Welcome back. Earlier today, it was reported new one-family houses sold is at the highest level we've seen since February of last year. That's the black line. The red line's the S&P 500. And we have a positive correlation here where when stocks go down, new one-family houses sold goes down, and conversely, when one line goes up, the other does as well. So the question remains, if stocks are so weak, why does this number look so good? Well, as they say, the devil's in the details. Now, on the left-hand side, the white histogram bar shows us down 10%. That's the monthly supply of new houses for sale versus those that were sold. The supply is going down month over month, down 10%, year over year, down 29%. Inventory is drying up. New one family houses sold up 12% month over month, 34% year over year. So the velocity is definitely in the favor of those houses being sold. New one family houses for sale month over month of 1%, year over year down 5%. So we see, well, the new one family houses for sale, that's not moving a lot. It's really the action now is in the homes that are sold, and that is really skewing this ratio. But how could that be? Well, we're going to take a look at these numbers in a much greater degree of detail. But I think what we're going to see is that while the velocity, the amount of homes being sold is increasing, the prices are going down. Yellow line here shows new one family homes for sale year over year. It's only down about 5% on a year over year basis, obviously, after hitting those highs of over 35%. These are the homes for sale. So the inventory is drying up. There was a lot more inventory going back to June of 2022, ironically, the beginning of the inverted bond markets. Also, we can see the black histogram bars that shows us the federal funds rate, the interest rates. And when interest rates are low, this is good for, this is good for the home builders. But when interest rates rise, this is really kind of pushing the home builders into a position where, maybe they're probably too afraid to build new homes. Here's the yellow line, new one family homes sold. These are the homes that were actually already sold. That is increasing again on a year over year basis, up 32%, which doesn't really make sense. We read a lot of articles today talking about the gravity defying new one family homes sold. Why are so many homes being sold? Well, they also talk about the fact that the numbers, as far as the values of the homes, are going down. So it's not the homes being sold, it's not from demand. It's rather because homes prices are going down. Now, here we see the monthly supply of new houses, and this currently stands and this is the monthly supply of new houses on a year over year basis, down around 30%. That is the supply that is shrinking. Again, because prices are going down, that's absorbing the inventory, but the inventory is not being replenished because home builders are too afraid of these very high interest rates. The blue line shows us a new one family homes for sale. The red line's the S&P 500. Generally speaking, we have over the long term a positive correlation. However, if you take a look at June of last year, June of 2022, we saw the S&P 500 really take a move to the downside where inventory rose. But these higher interest rates are really doing a number. It's not treating the home builder industry very well. It's putting, imagine, that we're a home builder and we say, okay, we're going to buy a piece of land, get a building permit, build something with the hope of selling a house in such a high interest rate environment. And that's why lately I think this correlation has changed from a positive to a negative. Here we see the black lines, a monthly supply of new houses. Now, this again is a ratio of new houses for sale versus those that are sold. The red line is the S&P 500. So when the black line goes up, it shows that there's more homes for sale versus those that are sold. Inventory was rising up until mid 22. Now inventory is shrinking and shrinking at, a pretty fast clip as well. We're now touching levels we've not seen since early 2022, it looks like. Overall, we tend to see a positive correlation. Well, if that's the case, maybe we'd expect further stock market weakness. By the way, This S&P 500 chart is updated up until the beginning of September, so we can compare these two numbers on an apples to apples basis, meaning, because these numbers are always delayed by a month. The housing numbers are delayed by a month, so we want to, match up the S&P, to match that axis. So with that said, the takeaway is that don't believe the headlines on face value. The headlines tell us, yes, new homes sold, the velocity is increasing to levels we haven't seen since February of last year, 15, 16-month highs. But the fact of the matter is that new home prices are declining, and that's why the market's able to absorb these homes. But meanwhile, where's the inventory? Where are the home builders? They're hiding behind very high interest rates, and we can't really blame them. We have a big economic number this calendar this week, so I'll be sure to update you along the way with any significant changes. We hope this has been helpful. We look forward to seeing you back soon.